See, our next topic is capital gains. Now see, this chapter will be studied broadly in two parts. Look at the screen. Part 1 is basic conditions in computation. Part 2 is section wise study. Means this chapter will also go purely section wise. But here the good part is what you can do these sums parallelly. Like in income from business, what was the case? We had to do the full theory together and then we started the sums. But here in between only we can start the sums. Okay. So part 1 is what? Basic condition computation and then section wise. Okay. And are you noticing? Your income from business stopped at 44. So immediately after 44, 45 to 55 is the range of capital gains. Okay, now see, look here. What do you mean by this basic condition and computation? Condition means what? What are the conditions for calculating capital gains? And computation means what is the method of computation? In short, see, basically you have to study two things here. When to compute capital gain, how to compute capital gain. By heart this. When to compute, how to compute. When to compute, how to compute. So when to compute means conditions. How to compute means computation. So initially my focus will be on that only. When to compute capital gains. Then how to compute capital gains. And for this I have kept one flowchart ready. In this flowchart you will understand when to compute and how to compute. Okay, see, when to compute there are two conditions. If these two conditions are fulfilled, then to compute capital gains. You asked when to compute, then to compute. When? Then. Whenever these two conditions are satisfied. Condition number 1, there must be a capital asset. Plus there must be transfer, then capital gains will arise. Now tell me, there must be capital asset, then why there must be transfer? Because see, asset cannot automatically generate profit. You have to sell it. Tell me, if I say I have got shares worth 50 crores. Shares worth 50 crores. So I have got assets. But when will I gain? When I sell it. That's why having the asset is not sufficient. You have to transfer it. Because basically capital gains is the profit from sale. So you have to sell it. But law doesn't say sell it. You have to transfer it. Why the law has used the word transfer, I will explain. But in short, I am broadly justifying just by having a capital asset, the gain do not arise. You have to transfer it. Now see, our next explanation will be what is a capital asset? What is a transfer? We have to understand the meaning of both, because only when these two criteria are fulfilled, then only capital gains comes into picture. And once you are convinced, yes, capital gains will come, the next target is how to compute. So first is when to compute and then how to compute. So tell me one by one. See, my plan is what you know. Please look at the screen. I will go in this flow. And once I reach here, our part 1 is over. Basics, okay. So tell me one by one, what is capital asset? See, asset everyone knows. But have I written asset or capital asset? So see, capital asset means assets which have got potential to earn. If something has got potential to earn, then it is called capital asset. Otherwise, you know, in our life, there are many assets. They are simply assets. They don't have earning power. Like at your home, television. At your home, you have got refrigerator. At your home, you have got sofa, dining table. These are your assets. You have got music system. These are your assets. But do they have the power to earn income? They don't have potential to earn. That's why they are simply assets. They are not capital asset. Now, imagine television on one hand On the other hand, if you have got shares, securities, then they are capital asset. See, a television might also cost me 1 lakh. Shares can also cost me 1 lakh. But television simply remains an asset. It gives me entertainment and entertainment. It does not give me income. It doesn't have the potential to earn. That's why they are assets. But compared to a television, if I buy shares, it is a capital asset because shares has the potential to earn. Why? Because even if you don't sell, it will generate dividend. And if you sell in the market, it will fetch a huge price. And the item which has potential to earn, they are called capital asset. See, actually, this is my version. In the law, the definition is something different only. But law definition, you will be convinced if you understand my version. So what was my version? Any asset which has potential to earn. Okay, that is a capital asset. And see, mostly every asset has a potential to earn, except these items like television, music system, microwave oven, sofa, dining table. They are just having utility. They don't have potential to earn. So they are not capital asset. But everything which has potential becomes a capital asset. So look here, look. This potential to earn, it is your sir's definition. And your sir definition will help you a lot. But now I will explain you law's definition. Look, in the law there is a section 214. And you know what section 214 says? Everything in this world is a capital asset except Mrs. GS. Which Mrs.? Mrs. GS. Except Mrs. GS. Everything is a capital asset. And if you sell, you will make capital gains. Okay? Everything. See, this is the style of law. What was my style? Potential to earn. Okay? So now the next question is what? What is Mrs. GS? Why it is not a capital asset? What is the logic? Okay? So one by one. See, the full form is ready here. In Mrs. GS, M stands for read. Movable personal assets. Everything which is movable and used in my personal life, they are not capital asset. Like television, music system, fridge, washing machine. Tell me, these are movable items or not? We use in our personal life or not? So that's why they are what? They are capital asset or not? They are not capital asset. Why? Because they do not have potential to earn. See, a person buys refrigerator for utility. Washing machine, utility. Means you want to use it. You don't have intention to make profit. So since these items are not intended to buy, so not intended to be taken for earning profit, and they do not even have potential to make income, that's why they are not a capital asset. That means if someone sells television, washing machine, you don't have to pay tax. Firstly, you will not even make profit. Imagine your television at home, if you sell it, will you make profit? You will not be able to make profit only. But by chance, imagine, you sell your television and you make profit, no tax. Because government does not regard it as a capital asset. So no capital asset, no capital gains. Then actually this point I taught only. But one thing did you notice? Movable personal assets. So do one thing, make this word movable opposite and then make the word personal opposite. Make it opposite, the thing will change. I'll do one thing, keep this constant. Keep personal asset constant. Instead of movable, what if it is immovable personal asset? Means it is what? My house. The house in which I stay, it is immovable. and it is my personal asset. So tell me, where will house come? Will it come in Mrs. GS or others? Others, because in Mrs. GS only movable items are there, but house is movable or immovable. So it will come here. And you know why? Because houses have got potential to earn. Tell me, today when I purchase a house property, what is my intention, you know? It will become my investment. I will be able to stay also, plus it will become my investment. So there is a dual motive. See, when I buy a fridge, only single motive. I will get cold water. I can refrigerate the thing. There is no investment motive. But when you buy a house, there is double motive. One is I can stay, plus it will become my investment, it will become my property, and houses have potential to earn. See, my logic is helping you to convince the definition of the law. Okay. So in short, only when it is a movable item, we will say not a capital asset, not a capital asset. But if it is immovable like my house, then it is a capital asset. That means if you sell the house, capital gain will arise. Then make this opposite. Keep this constant. Movable business assets. Movable business assets. So see, movable personal comes in Mrs. GS. So where will movable business come? Others. So like air condition. Air condition, look, if air condition installed in the classroom, it becomes a movable personal classroom. It is a movable business asset. Now tell me, does this AC has potential to earn? Yes. Because of AC, I am able to get fees from my students. Many students come to the class for AC. In short, this is helping me to generate income or not. My lecture is not simply generating. Even this air condition is having potential to generate fees from students. But if the same AC is at my home, so that is having no potential to earn. That's why movable personal is not a capital asset. If it is business, then capital asset. Okay. In short, I was simply making the opposite of these words and convincing you. Okay. So in short, when it is not a capital asset, movable plus personal, then not a capital asset. Then next point, rally. You know what is rally? Rural, agricultural land in India. So tell me, it is an agricultural land. So what is your opinion about land? Does land have potential to earn? Super potential. Land is the hero of all the assets in the world. So if I say land has potential, obviously, but then government has kept in Mrs. GS. If it has a potential to earn, look, it should be there in other asset. But government is saying no, it will be Mrs. GS, it is not a capital asset. So see, we understand land has potential to earn, but because it is used for agriculture in a rural area by a farmer, so government wants to give importance to that. And the way of giving importance is what? It is exempt from capital gains. That means if a farmer sells his agricultural land, he doesn't have to pay tax on the capital gains. Even if he makes profits of 2 crores, no tax. This is because government wants to give importance to agriculture. But technically speaking, this is a land. Land has a potential to earn. So technically it is others. But then because of the agriculture factor, government wanted to exempt it. But see, agriculture is not the only factor. It should be in rural area also. Plus India also. Because government wants to give importance to agriculture in India. And that also it should be rural area. And anyways, mostly agricultural activity happen in rural area. If someone says, no, my agriculture land is in urban area, it is in proper Chennai, it is in proper Hyderabad, then capital gains will come. Then people will say, but now it is agriculture na. It's okay, it's agriculture, but in big city, if you have got big land, it's high value land. We cannot exempt it. Because if you sell land in Chennai, Hyderabad, a big city, you will make huge profit. Sorry, we cannot exempt it. And anyways, don't feel bad. Mostly rural areas only agriculture happens. Okay. And that government has exempted. In short, it should be rural, agriculture land and that too in India. Then there is no capital gains. Then stock in trade. You know what is stock in trade? Anything which is a goods for me, for which I am doing the business, is a stock in trade. Tell me, can land be a stock in trade? Can shares be a stock in trade? Anything can become stock in trade. The item which is my product, it is my stock in trade. So see, generally shares, land, etc., they are capital asset. But if you hold like a stock in trade, if you are into business of there, then it is not a capital asset. Why? Because if you hold something as stock, then by selling it you generate business income, and business income is a separate head of income. Here we are talking about capital gains. Business income is a different head. So tell me, if I am holding shares, for me shares is a business. I am doing the business of selling land only. I am doing the business of selling houses only. It is my business only. Then for me it's like goods. Then for that we have already studied the topic income from business. And if it already comes in income from business, how can it come here? It will amount to double effect. See, everywhere you get to know the justification. Huh? See, here what was the justification? It comes in business. Here what is the justification? Agriculture importance. Give importance to agriculture. And here these are useless assets. They do not have potential to earn. Fridge, washing machine. Then gold bonds, special bearer bonds. These two have common logic. First tell me, generally bonds have potential to earn or not? Or bonds are waste items? They are not waste items. When you invest in bonds, bonds appreciate, you get interest. And anything which can generate income, it has a potential. It's a capital asset. But you know why these bonds are not treated as a capital asset? Because they are government bonds. And government wants to make the bonds attractive. Purposely government has said that these items will not be regarded as capital asset, exempt from capital gains. So this becomes attraction for the investor. So if an investor is so much keen in investing bonds, so he will be attracted here. Instead of investing in bonds of Reliance, bonds of some other company, he will be inclined to invest here, because these are government bonds only. By the way, gold bonds I have already explained. In income from other source, gold bonds, POSBA, PPF, Sukanya. But please don't mix up. You know, there what we are studying, if you hold the bonds and every year you get interest, that is exempt. But here I am saying you are holding or you are solding. Solding. See, when holding, interest income. Solding, capital gain. Hold, sold. Hold, sold. There are two things only. As long as you hold, you get interest income, which is exempt in EFOS. But that is when you hold. But what if when you sold? Then when you sell, capital gains. But even that is exempt. That means gold bonds has got double benefit. See, as a chartered accountant, you want to advise someone. You can advise, invest in gold bonds. As long as you hold the bonds, every year you will get interest, which is exempt in EFOS. And then when you sell the bonds, no capital gains also. Because gold bonds are kept in Mrs. GS, which is not a capital asset, no capital gains. Same logic goes for special bearer bonds. But let me tell you, at present in the market, there are no special bearer bonds. They were existing earlier, but now they are redeemed. So now you will say, then why we are learning? Actually, no need to learn, but you should have knowledge. What if in the near future a fresh issue or special bearer bond comes? The rule is still the same. Currently, if you want to invest in special bearer bonds, you will not find anywhere. But what if a fresh issue comes? This knowledge will be useful. Oh, sir has explained us. This is exam. Let us invest here. And if you invest here, what is the advantage? Capital gain will be exempt. Okay. But anyways, in exam, this special bearer bonds will not come, because in exam they ask only that things which are existing in real life. Okay. Okay, now one more thing. Tell me, in movable personal asset, what did I say? No potential to earn, so no capital gains, correct? Tell me, what about jewelry? Jewelry is Mrs. GS or others? Technically, it is Mrs. GS. Tell me how. Jewelry is movable, personal. You wear jewelry in day to day life. You wear earrings, you wear uh, rings, necklace, etc. It is used in day to day life. So jewelry is movable also. It is personal also. So that way it is Mrs. GS. So it should not be a capital asset. But jewelry is an exception, because jewelry has got potential to earn. You know, why do people buy gold and silver? Not just for wearing. It has dual motive. First thing you think, I can wear and I can nicely dress up in jewelry. Plus, gold and silver appreciates. There is investment motive also. So that proves jewelry has got potential to earn. Anything which has potential to earn, it's a capital asset. And jewelry, although it is movable, personal, asset, but since it has got potential to earn, it is a capital asset, capital gain will arise. There are three exceptions of movable personal assets. Look at this. See these 3 points, what is common, you know? They are all movable personal assets. So from that angle, if you see, you should feel it is not a capital asset. But exception means exception. Although they are Mrs. GS items, we will treat it as a capital asset. So one exception I taught you, jewelry. Another one is dapsa. You know what is dapsa? Drawings, painting, sculpture, any work of art. First answer, is drawings and painting technically a movable personal asset? Like I give you example, I have a hobby of painting. Painting is my hobby, example. So as my hobby, I painted a good thing. So tell me that painting is movable? Say yes. And it's my hobby. So it's my personal life. Hobby is personal. So technically painting is Mrs. GS, but it has potential to earn. Imagine that painting which I did as hobby, what if I display in an exhibition? Yes, there are there are people who are crazy for art. Someone can give 1 crore for my painting. Okay, it's okay, I understand my painting might not be good, but it's not about my painting. It's about painting. So painting has potential to earn. And although it is your personal life hobby, but then it has potential to earn, so it becomes a capital asset. Similarly, archaeological collections. What is archaeological? New antique pieces means items of very old ancient times. So you know many people have the hobby of collecting antique pieces. So that hobby is actually a movable personal item. Anything your hobby is a personal thing. Plus antiques are also movable, but it has potential to earn. Same thing if I put it in an exhibition. So there are people who are crazy for antique items. They are ready to spend. So it has potential to earn. So in short, see, there are three things in our personal life which although movable and personal, but because they have potential to earn, they are falling in other assets. In short, in jewelry, dubs and archaeological collection, will you calculate capital gains? Yes. But for all other Mrs. GS items, no capital gains. Okay. This is section 214. See, I have written the summary of this. Read. So, Mrs. GS is not a capital asset. Rest all a tick means capital asset. Now, next point is transfer. What do you mean by transfer? You know, if government would have told that you should sell the asset, means instead of word transfer, if the law would have said you should sell the asset, there should be sale. So you know what will happen? Capital gain will be restricted only in sale. And you know, you will soon realize there are many other transactions which can generate gain. And if law, like a fool, if they say only sale, only sale, only sale, so capital gain become restricted. Government will lose the money. And soon you will realize, as I said, there are other transactions which can generate gain. That's why law is very smart. They are not saying sale, transfer. And transfer is a broad term. It includes sale and many more transactions. Okay, now look here. Now, what is the definition of transfer? First, I will give my version. Then I will give government's version. Okay, my version will help you a lot. See, my version. Transfer means any transaction where there is change in the ownership. Whenever ownership changes, it becomes a transfer. There should be change in the ownership. So this criteria will help you a lot to understand conceptually. So this is my definition, okay? But see, what is government's definition? See, this is my definition in the bracket. But as per government, section 247 says, transfer means sarak 2. I call it as sarak 2. Sarak 2. Why will I sarak? You sarak. 2 means 2. In Hindi we say 2. Sarak 2. Now look, there is a full form for this. SEREC1 C2. There are actually 1, 2, 3, 4, 5, 6 transactions. You know what is the way of definition of government? They have given a list. These transactions, whenever they occur, pay the tax. Actually, the law doesn't define. They are not interested in explaining you what is transfer. See, law is interested in money. They are not interested in explaining. But your teacher is interested in explaining the concept. So I had to explain, dear students, when there is change in ownership, we say it's a transfer. But you know, law is not bothered to explain. They have just given a list. This happens, give us tax. Means they have given list of transactions. In that list, S stands for sale. E for exchange. R for relinquishment. E for extinguishment of rights in a capital asset. Then compulsory acquisition of capital asset by government. Conversion of capital asset into stock in trade. Just listen once. These are the 6 transactions which are defined as transfer. Means nowhere government is interested in explaining the meaning. They are saying whenever these transactions occur, pay the tax. Okay. Basically, law is trying to say what you know. We are not restricted to sale. Apart from sale, exchange, relinquishment, extinguishment, blah, blah, blah. Anything happens, we want tax. That is a different case that in real life, 99% gain happens on sale only. See, right now we are talking about technically. But practically speaking, 99.9% people make profit through sale only. These things which I said right now, they are rare transactions. But although rare, if there are chances of making gain, why should not government tax you? Okay. Now see, what was the full form? Sale, exchange, relinquishment, extinguishment, compulsory acquisition, conversion of capital asset into stock in trade. Now see, at this moment the student will expect, now sir will explain the meaning of all this. No. Right now if I explain the meaning of all this, the topic will become very dry. Because see, right now if I explain the dictionary meaning of these various words, you will not get that good feeling. So my plan is what, look, I am not touching the explanation of this right now. See my plan, look, when I teach you section wise, in some section or the other, these concepts will be automatically covered. And that time we will be solving the sums also. So that will be a quality explanation. See, dictionary meaning you will understand, but then you will always have a question, so what, now what? So explaining this at this moment would be wrong. So my plan is what, you just keep in mind there are several transactions which can lead to capital gains. Now what are they exactly? Sir will teach at a proper time. Till the time I teach you, you be happy with the definition of sale. Sale, everyone knows what is sale, that's it. What are these things? Soon I will explain in the section wise explanation, okay? So transfer definition is over, read. Read what I have written. See, our flowchart is gradually being revealed. So see, condition 1, there must be capital asset, means something other than Mrs. GS. And then it should sarak. It should sarak means there should be transfer. And then capital gains will arise. Can you see this plus sign and equals to sign? That plus that combination happens, so capital gains will arise. Okay. See, now the next question is, once capital gains arise, the next question is it short term or long term? And if short term, how do we do the calculation? And if long term, how do we do the calculation? So here what is remaining, how to decide short and long, and how to calculate short term and long term capital gains. All this once I explained, our part 1 will get over. But that it is not possible to do today, because right now if I go into this short and long, it is unending explanation. So I am not touching it. Okay. So I just introduced the basic part of capital gains. Basic also is not complete. You simply know when to calculate capital gain. What you don't know is how to calculate. When to calculate, you know. When to calculate? Whenever there is a capital asset, means anything other than Mrs. GS, and there is a transfer, then to calculate capital gains. When? Then. But how? To be done later. Okay? Bye. Revise then come. Revise then come. Please revise then come. Okay?